Good afternoon and welcome to your weekly FX options report. Today is Wednesday, November 11th, 2009. In midweek trade, the U.S. equity markets are seeing gains, and this does come as the latest comments from Federal Reserve officials continue to be digested. Now, in the previous session, Fed speakers did say that high unemployment in the U.S. combined with lower consumer spending could keep the U.S. economic recovery weak. Meanwhile, there are expectations that interest rates here in the U.S. will remain low for some time. Now, it is empty on the U.S. economic data front with the bond markets closed in observance of Veterans Day holiday, but the stock and futures markets are open. Now, shifting our focus on over to the spot FX market, we're seeing that the dollar is weaker against the euro, but it has gained against the Japanese yen. Now, better than expected Chinese economic data releases, which included retail sales as well as industrial production data, combined with comments from PBOC officials, have been a driver of FX markets in today's session. This has boosted overall risk appetite as well as global equities. Now, the Chinese central bank did announce that it would manage currencies based on international capital flows as well as major currency movements. And at the same time, we're seeing that the British pound is weaker against the U.S. currency. This does come following the release of the Bank of England's quarterly inflation report. The sterling was down by over 1% against the U.S. dollar as earlier gains were paired. Now, the central bank's king left the door open for more quantitative easing, and the BOE did raise its growth and inflation forecast at the same time, although inflation is expected to come in below targets. Now, one way to trade your views on U.S. dollar strength or weakness is to take a look at IC's FX options. One advantage is that they are U.S. dollar denominated. For more information, you can go to www.fxoptions.com. And in our next segment, we will take a closer look at IC's FX options. And so we will start out with dollar Aussie, ticker symbol AUX. Now, in the short term, the downside does prevail. The RSI has just hit its neutrality area at 50% and is reversing down. The preference of trading central analysts is short positions below 112.50 with targets standing at 107 and 102 in extension. Now, let's take a look at the BPX, which is dollar sterling. In the short term, the downside does prevail and the pair is challenging its support. The RSI is mixed to bearish, and the preference of trading central analysts is short positions below the pivot of 62 with targets standing at 58.70 and 56 in extension. Now, taking a quick look at dollar CAD, which is ticker symbol CDD, caution is advised for this pair. The intraday technical indicators are mixed and calling for caution. The preference of trading central analysts is short positions below the pivot of 108.50 with targets standing at 102.50 and 100 in extension. Now, let's take a quick look at dollar euro, which is ticker symbol EUI. This pair is under pressure and does remain within a bearish channel. It is currently challenging its support, and the RSI is badly directed. The preference of trading central analysts is short positions below the pivot of 68.50 with targets standing at 65.50 and 63.30 in extension. Now, let's take a quick look at dollar Swiss franc, which is ticker symbol SFC. In the short term, the downside does prevail and the pair has struck against its resistance and is challenging its support. The RSI for this pair is capped by a declining trend line. The preference of trading central analysts is short positions below 103.50 with targets at 100.30 and 99 in extension. And last but not least, let's take a look at dollar yen, which is ticker symbol YUK. It is under pressure and is challenging its support. The RSI for this pair is badly directed, and the preference of trading central analysts is short positions below 92.40 with targets standing at 89.50 and 87 in extension. And now that we've taken a look at the major IC FX option pairs, let's move on to our weekly commentary. Now, last week, the US dollar continued to strengthen, and Trading Central did take advantage of the pullback to enter new dollar positions, including Aussie dollar, which is AUM, and they also remain long on the call for the euro dollar, which is the EUU. Now, in terms of portfolio performance, since its inception, it does stand at 1,252.98%, and since the beginning of this year, it is up by 621.99%. And now in our next segment, we will bring you our trade alert for the major FX option pairs. Now, Trading Central analysts will be looking at euro dollar EUU. Earlier this week, Trading Central did recommend calls on the EUU as the pair was rebounding on its new support. Now, Trading Central also recommended buying a call on the British pound GBP as the pair was breaking above its horizontal resistance as well as channel upper boundary. Now, Trading Central also recommended buying puts on the CDD as the pair struck against its declining trend line and was challenging its support. And last but not least, they will be looking at the SFC, which does remain under pressure as it is challenging its support. Now, looking ahead to next week, Trading Central will be staying short on the US dollar because they do not see any reversal signs against the major currencies. But they will be looking at the YUK on a medium term because the bias does remain bearish, but the outlook is not necessarily clear. And also, they will be watching the trend on the Kiwi as well as the Aussie dollar. If they do lose momentum, Trading Central analysts will take advantage of any pullbacks to enter new US dollar short positions. And that does wrap it up for this week's FX Options Report. Make sure to tune in next Wednesday for your latest update. Thanks for watching and have a great day.